yes, there might be a buyer that will pay more for that specific property. But again, it's all based on time. How much time does the seller have? Do they have to sell right away? Can they wait 3 months? Can they wait 6 months? And according to that, you come up with a strategy and a plan with your realtor to price it accordingly to test the market.
Welcome to the Farms in BC podcast. My name is Jay Cack, and we have my partner here, Nav and we got a brand new, refreshed look to our podcast here today.
Yeah, it looks nice.
Yeah. And Nav, maybe you can mention a little bit more about what this podcast is really going to be gearing for.
So today we're going to be discussing the last interest rate announcement that was done on October 25th. We're going to talk about the interest rates. We're going to talk about what the fixed rates are, what are the variable rates, and we're going to be discussing how that's impacted our local agricultural real estate market.
Mm-hmm. Yeah. And this, once again, this podcast is in relation to everything agricultural real estate, whether it be buying, selling, kind of how the markets are fluctuating. And this is primarily here in Metro Vancouver and Fraser Valley.
That's right.
And anything else we can add on what we're expecting from Farms in BC podcast here?
Our goal here is to make sure that we bring you the latest updated information about what the industry is doing, what the markets are doing, and bring in some professionals that are professionals segmented in every single part of the agricultural industry. Mm-hmm. And also, I would love to bring in some farmers on that can come and tell their success stories. Oh, that's absolutely. Kind of, I really want to build that agricultural culture here at Farms in BC podcast.
Yeah, absolutely. And one of the most fun parts of our jobs is actually hearing those stories.
That's right.
The big trajectories that they've taken over those long periods of time, right? So usually it goes pretty in depth.
Some of these families, you look back, they've started back in like the 40s, the 50s, the history of that they have here in BC and how they've started in agriculture and how second, third generations have expanded their operations. So I really want to bring some of those guests out, speak to them, see what their challenges were, see what their successes are, where they're at now, where they want to grow to. Mm-hmm. Yeah.
Awesome. And with that, we really want to talk about today is the Bank of Canada change that occurred in October 25th.
Yeah.
Overall, the headline is the rates held.
That's right.
Right. Maybe your thoughts on that?
Yeah, they held. I think a lot of people were expecting it to hold. Mm-hmm. That was a sentiment around closer to that date. I think weeks prior, people were on the edge. It was like, oh, it was 50-50. Either they were going to increase or they were going to hold. But when we got closer to, a lot of reports came out and it showed that it made sense to just hold it. That being said, did it really affect the market? Or is it everything still the same?
Yeah, it held at 5%, and that's a number that we haven't touched for a long time in BC and Canada in general, right? So it's like it is new ground in general.
Yeah.
Even the hold by itself is still impacting a lot of people's dollars at the end of the day, right? So that's one of the things that we have to really consider when we're looking into the purchasing side of things or even the selling side of things, when we're looking to price a property and whatnot, right? Can people afford it with the current rate situation? If it was up, I don't think it would have been a good news story, but what are your thoughts?
The last time they had that hold, we saw a spike in the market right away. Yeah. I'm not feeling that. We're about a week and a half in since that announcement, and I really wanted to kind of engage and see how this is going to change the marketplace. I haven't seen it change significantly. Mm-hmm. Our call volume has gone up, so you can see that some buyers are thinking about coming off the sidelines, but we're not seeing that aggressively in sales transactions yet. There has been a big relief on a lot of sellers that were thinking about selling, not having another bump in the rate, and people are on variable mortgages. That does help them a little bit, but they are now also thinking, should we just list right now versus waiting in the spring? Mm-hmm. That being said, there's going to be another announcement here on October 6th. So My gut feeling.
November 6th or
December 6th.
Oh, December 6th. Okay,
Yeah.
Gotcha.
So it's not too far away now, but that will also bring more assurance to buyers that, hey, we have reached the bottom. The interest rates aren't going to go up. That's if they hold.
Yeah.
I've got a very strong feeling that from here on out that we'll see minimal or if any interest rate hikes. I don't think we're going to see any.
Yeah.
My personal opinion.
I think it's a tight situation that we're already in. A lot of people are hurting on the rate side of things, and I mean it's we're hearing the stories day in day out, right? So we're really in conversations with our clients here, and it's coming to the point where there is a lot of people that do have to sell, right?
Yes.
Simply because of the situation that they're in terms of the rates. It's not ideal. Obviously, we're looking to find some sort of solution to this, but there isn't really. It's also global factors now that are coming into play, which is really hard to deal with. You can't really control that Canada-wide.
It's inflation too. Yeah. It's not just the interest rates itself.
Yeah.
It's cost of living, cost of food, cost of everything has significantly skyrocketed. And I think, that getting that back to that 2% target, I think they've also mentioned that they don't even think, Bank of Canada doesn't even think that they can get it back to 2% by end of 2024.
Yeah.
So that being said, they've also announced a few days ago that, they might even actually just start reducing rates prior to inflation hitting 2%. Now that's some positive news because they've never had those discussions before. They were always putting out the narrative that, no, there's no, everybody, this is not going to be the forever hold. Chances of interest rates still increasing are quite high. The last discussion that they've had, that I've looked up, they did mention, hey, you know what? If inflation does not hit 2%, we're still looking at cutting rates. My other feeling is about the bond rates is that you're going to see these bond rates starting to fall. The banks are going to start pushing back, and we're going to start seeing, my gut feeling is we're going to start seeing fixed rates drop faster, right? And I think that might even be as early as February, March. So, and they're saying that interest rates might fall between mid next year, end of next year, but I have a feeling that it's going to have to decrease sooner than later.
I feel like this hold is most likely to stay at least till the end of 2024, or at least around that mark, before we see any relief of that. I mean,
so you don't think they're going to be
it'll go up either?
Well, you don't think they're going to be. You don't think they'll decrease the interest rates next year?
It's the next year. I don't know about 2024.
Yeah.
But 2025 is when I feel like they're probably going to start decreasing.
Okay.
It's also better to err on the side of caution as well. That's kind of what my mindset is.
Yeah.
You should prepare for the worst.
Yeah, you should always prepare for the worst. But
and
it's
be optimistic, but still.
Yeah.
Always be prepared, right?
I guess I'm always optimistic. Yeah. That's my challenge. Yeah.
True.
Yeah.
Yeah, but then also at the same time, we kind of give everybody their options at that in the situation that they're in, right? Yes. And we're also seeing that variable rates are an option right now. A lot of people are keeping their mortgages open.
Well, that's just the challenge, right? Like you're thinking the interest rates are going to start coming down 2025.
Yeah,
I'm thinking it's going to be somewhere early 2024. Bank of Canada's economists, some are estimating mid 2024. Right. So. That being said, are you going to go lock in for 5 years at what are 5 years fixed right now at like 6.5, 7, 6.15, 6.15, 6.5. Commercial ag lending is at 7 plus. Yeah. Are you really going to go lock in for 5 years, or are you going to maybe take the 3 years and hedge the risk? You might pay less now for the year and a half, but you might have to pay a year and a half of higher rates, but you can always renew after 3 years versus 5.
I think that's the most popular option right now.
That has been.
It is going into that 3 year, maybe even 2 year fixed.
Yeah.
You get a rate that's relatively the same, around 6.5%, almost 7% or so.
Yeah.
You are fixed. You are stuck in that for a couple of years or 3 years.
Yeah.
But after that, you have the chance to renew, and hopefully at that point in time, the rates are lower. Right, so you're kind of hoping on that.
And then there's there's people that are very bullish, like myself. In my opinion, I would keep it open for the next year and risk it that way. Pay a little bit more now up front versus paying little now. Pay up more up front, and then when I'm going to go lock in for 3 to 5, hopefully my 5-year fixed is about 5%.
Yeah.
Right.
And by open we mean variable in general.
Yes.
But
yeah.
And variable right now it's what, 6.75 to 7.25 roughly in that ballpark.
It's such a wide range because if you look at bare land, house and acreage versus ag commercial, ag commercial is going to fall on the commercial rate side, which is on the higher end. You're going to be anywhere above the 7 mark.
And that's the unique thing about our business here is that we're very much in the middle of commercial and residential. You usually have a bit of both, right? So, and then really it depends on where does your rate land. Does it land in the residential rates or does it land in the commercial rates? And that really depends on your property and what you have on there and everything else. If you have a home and everything else, right? So
that's right.
Big factors to consider. Now, is it a good time to buy?
I think if you're buying a property in this market and you've got a purpose for it, we've touched base on this before. I don't think if you're an investor, it's a good time to buy. But I think if you've got purpose for a property and you've been waiting on the sidelines, we're going to be at rock bottom prices. And I do feel that they will bounce back sooner than a lot of people think.
And I think the biggest purpose is obviously having a place to live.
That's right.
And if that's the case, downsizing or upsizing, those purposes are actually still very relevant, and they're going to be continuing to go forward. One of the advantages of right now is that you may be selling at a price that's a little bit lower price point, but if you're buying in the same market, you're taking advantage of a lower price point on the buying side anyways.
The last few deals that we've done, I've noticed the buyers have had the control on the negotiation to dictate the terms. So price aside, we're seeing that buyers can negotiate favorable terms, which will hedge their risk and by doing later closings, they're doing more sellers are willing to do subject to sale now. So the risk on the buyer can be very limited if you can structure the deal correctly and get the favorable terms along with the price. And I think that's what you're going to see here from now till February, March. Once the interest rates start coming down, my personal gut feeling is saying that anyone that's thinking that was on the sidelines are all going to start jumping in, and you're going to start seeing the sellers get a little bit more motivated, and they're not going to give these favorable terms that you will get now. I know we're starting to see these deals starting to come within negotiation. The buyers have a lot more negotiating power.
For sure. I think it's really driving the market right now is that buyer's angle, right? So they're able to actually get their due diligence done to the extent that they need it to be confident.
They're getting the time,
Yeah, they definitely have the time for it. And then at the same time, when the seller sells, they also get to go through that cycle again.
Correct.
And get that advantage on the buying angle.
Correct.
Right. So it's still moving the market forward. And with this market change that happened in October 25th, we noticed that the sentiment did become a little bit more optimistic. It depends on the area you're in. For example, Chilliwack is quite active. We had 5-6 offers over a weekend. Over that weekend, that the rate changed. Right. So overall, it did make a difference.
We're seeing that also in Surrey. Langley, there's a lot of inventory. We're seeing a lot of showings, but less action. So a lot of people are still afraid to write offers. Definitely Surrey. We've seen a lot of sales still happen in Richmond and Delta. Things are still going to be moving. And I think there's just less buyers out there, and they're just being very picky, and they should be. We're in either a balanced market or a buyer's market. That's what we're in between right now.
Now, is it a good time to sell in general? What would you say to that?
I don't know, how many have you done these last 5 weeks? I think we're doing almost 2 to 4 evaluations a week. give or take. Like it's the sentiment is this: like if you don't need to sell, I would wait. I would try to wait till anywhere from March to August. Reevaluate your property, reanalyze the market in in March, or even early February, and kind of dictate if it's the right time to sell. Look, prices may not skyrocket, but you definitely will have a bigger buyer pool. You'll be able to sell a little bit faster. You possibly will get a higher price. That's what I'm telling all the sellers right now. If you can hold. Now, if you have to sell, or you need to sell, or it's an estate sale, or whatever the case may be, you have to list it right away. You have to put it on. You have to sell. It is best to be very careful that A, that you price it correctly, and B, that the marketing is done correctly. And that's what I'm seeing I'm seeing listings come up, marketing is not done correctly. I'm seeing price points at some places are like still $1 million above what market should be. This is not the market to play around in. This is not the market to list high and then chase the market down. You're better off, if you've got that time to hold and play that game, you might as well not put it on the market, wait till February, put it on at a correct price, and then run that model, right?
Now, another factor is when the actual hold happened, we also have another strategy where we actually price it sharper, or actually reduce the price to the price point that you feel is most comfortable for that market. And that also helped a lot in some of our listings to really get the ball rolling, because the sentiment changed when the property the rates were on hold. Plus the price went down on a specific property. The people that were on the fence, they actually moved forward to an offer.
That's right.
So I think that was the biggest difference maker.
We're still advising a lot of our sellers that are on the market that are sitting at a price point that's not getting much action, or have had a lot of showings but no offers. It is time to either make that decision. Am I going to reduce the price, take it off, or just leave it the way it is but be in it for the long haul, right? And our job is to give options. Our job is to be straightforward and let them know what's happening out there in the marketplace, guide them the best we can. They have to make the decision saying, yes, we agree, and they know their financial situation better than we do most of the time. Okay.
And another situation is the Bank of Canada mentioned themselves is that the price points aren't coming down as they expected them to. And I feel like it's probably having to do with the fact that a lot of these sellers that were contemplating selling got price points that were much higher than they were even expecting to get because of the rise of the market at that time. And now they're really stuck on those numbers. It's almost a stubbornness at this point in time.
And I think when you go out and get a market evaluation from 4 realtors, and some realtors are out there looking to buy listings, so they'll give you a higher price to get the listing, and they start reducing the price. What that does is that actually just puts you in jeopardy and false hope that you're going to get this price. But if you don't know how to evaluate, the way some of these realtors do is they'll just overprice it, get the listing, and then start reducing it until it sells, which is good in some ways, because yes, there might be a buyer that will pay more for that specific property, but again, it's all based on time. How much time does the seller have? Do they have to sell right away? Can they wait 3 months? Can they wait 6 months? And according to that, you come up with a strategy and a plan with your realtor to price it accordingly to test the market. Right? And we get sellers all the time. You know what? Put it at this price. I don't care if it sells today or in 10 years. Like, I want to sell, but I'm not desperate. And that's fine.
Especially in our niche, where these properties don't go up for sale for over 20 years at a time, and they want to shoot that shot essentially, right? So they want that price point in their mind that they feel that they deserve. But at the end of the day, the market speaks for itself.
Deserve or could have gotten in 2022. And I think that's also the challenge, is going through that mental process of someone might have given you an offer in 2022, which was really high. Now you've got that price point stuck in your mind, and we've just went through a massive correction. Now, what that was and what today is quite different. Will that come back? I'm very confident it's going to come back. Is it going to be end of 2024, early 2025, 2026? But it will come back. And it goes back to how long, what's your plan? Can you hold it for a year? Can you hold it for 2 years, right? So it's holding power and plan. Sometimes you have to sell based on certain circumstances, and you can't really play the market. You just got to play. Your family's well-being is more important than money. It might be a couple $100,000 at that point, right?
Right. Yeah, there's a lot of situations where people bought just because of the hype of the market in 21, 22. Yeah. They're at a price point that's astronomical. Yeah. But their rate now is coming to haunt them, because in the next couple of years, there's going to be, if not next year, is going to be when there's going to be a rate adjustment, and they're going to have to, the term's going to change. Well,
I think the scary part for the next 2 years is going to be what percentage of renewals are coming up. And I think they were saying something like 60% of renewals are going to be due. Now that's mostly residential, but how is that going to impact the marketplace? Are they going to just renew at this higher rate, and how long can they hold for? So your payment's $2,000 or $4,000, and now it's doubled. How long can you hold that for, right? My gut feeling says that Bank of Canada, the big major banks, they're gonna, on renewals, they will start doing some flexibility. So I think there's something that just came out yesterday where they said they're not going to do stress tests on renewals.
Interesting.
So that takes off 2% right away. So it gives you more borrowing power. I also feel on renewals, they may extend amortizations. So like the banks are not in the business to foreclose. The banks are not in the business to take your property and sell it.
I heard 40 years is on the horizon. It's already been implemented with a couple banks.
So if it's already quietly being implemented, they're just going to make it public. And I feel that this 60%, maybe 30, maybe half of that will still have to sell, and half of that might be able to absorb the new changes and take advantage of the amortization, and take advantage of the stress test not being there and be okay. So no one really knows, and I guess next year by end of next year, I think the dust will completely settle on this interest rate topic, right?
Well, that pretty much sums it up for this rate change. Any final thoughts on this?
It's everyone's on a different case to case. And I think it's best to get a hold of your professionals, get a hold of your mortgage brokers, get a hold of your realtors, come up with a plan, right? If you're thinking about selling or buying, consultations are the most important thing right now. Get your professionals, get your advice, create a plan, do some tax planning, and be strategic. This is not the market to play games, right? If you're a true buyer, you're going to be in the driver's seat. Go out there and start negotiating hard, and you might find some really good deals. If you're a seller, price it correctly. Create a plan of what you're going to do next. What is your next 6 months? What does your year look like? Right?
And as we always say, everyone's situation is different. So we do recommend that the viewers actually, if they are interested or they are thinking of buying or selling, do feel free to reach out either through the contact information below or just directly at our farmsofbc.com website. And then from there, we would actually meet up, have a conversation, find out the situation, and really understand if it's the right time to sell or buy or what have you. And maybe
depending on your
maybe
situation,
it's a couple years down the road, right?
Yeah.
And these things can only really be dissected once you actually have that conversation.
That's right.
Thank you for tuning in, and we'll catch you next time on the Farms of BC podcast.